broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you this Monday morning from the CNBC-TV18 Motilal Oswal studios. As always, I am Prashant. With me, my colleagues Nigel and Sonia. Guys, hi, morning.
Hi, good morning, Prashant. Good morning, Nigel. And last 15 days of the calendar year, you know, there's festivities all around across the city. There's so much by way of celebrations happening. Yeah. And I think the market is also in celebratory mood, right? 21,000 was hit on the Nifty. And there are no indications of the stopping of this rally. Perhaps a pause, perhaps catching of its breath. But the uptrend seems to be very much intact.
Well, that's right. You know, things are looking good. The only fear is the consensus is that this market is going to go up across ages, across, everywhere you go. Everyone just talking about the market moving up. So at times, suddenly the markets could surprise you. But if you're buying it for the long term, then definitely you must participate on the upside.
Well, I think that's well said. And let's just, we've got to live day by day, and we'll tell you what you need to know as we begin another trading session, another trading week. And it's looking good. Once again, it's looking good, not just from a local perspective. It's looked good for a while, irrespective of the global screen. But the global stuff is also not bad. So let's just start with telling you where we left off on Friday, right? Last week was massive. Same time, if you think back, rewind the clock exactly 1 week ago on Monday morning, we were coming out of that weekend with that massive victory for the BJP and Prime Minister Modi, and the market was looking exuberant. I mean, that day we got a 400-point move on the Nifty, almost 400-point move on the Nifty. And that sort of cumulatively, Friday to Friday, that is last week, the Nifty went up 3.5%, the Nifty Bank went up 5.5%. So these were very large moves. The up move is still on, right? But if you look at it on a day-to-day basis, last Thursday and Friday, there were intraday pullbacks. So nothing dramatic, but the momentum, which was kind of non-stop on Monday, Tuesday and Wednesday, it kind of faded a little bit. On Thursday specifically, Friday also looked flat to slightly lower. And then, of course, in the last 60, 90 minutes, there was that 70-point pullback that we had. But so that's what I'm saying, the up move is still on. Now to the global screen, it's pretty good on Friday. The Nasdaq ended about 0.5% higher. The 10-year was up about 8 basis points. The dollar index also went up, by the way. Dollar was largely strong against other global currencies. We're at about 104 on the US dollar. Now, the data which kind of led to this is the jobs number. US November jobs report was strong. I mean, by any metric. So you look at the payrolls number, which is the actual addition to jobs. You look at the unemployment rate. You look at the average hourly earnings. You can't really find chinks in that sense in the armor. So very good data. At the same time, importantly, you also had the University of Michigan inflation expectations, which came in weaker, right? So the jobs data is for November. The UMich survey is for December. That came in weaker at 3.1% compared to 4.3%, which was the consensus expectation. And the reason I say it is important that we got one sort of weakish data as well is because the market at the margin would have started to worry that all of the rate cuts which are priced in for 2024, starting, by the way, with some expecting a cut in March, will not happen if the data is weak. So that's why I'm saying that this inflation expectation is important. The Fed, by the way, the decision is on Wednesday. We will react to it on Thursday morning. The Fed is expected to leave rates unchanged. That was the expectation before the jobs data. I don't think it's changed, even though the jobs number has been strong. This will be, if they leave rates unchanged, the third straight meeting when, they've done so. But because of, this sort of a little bit of one strong and one weak kind of data point, the US CPI number, which we get on Tuesday, will become important because we will get that before the Fed decision on Wednesday. So the US CPI, in that sense, will be important to track tomorrow. Just one more data point, and this is important for the metals pack. Over the weekend, we got Chinese CPI numbers, which came in at minus 0.5%. I mean, that is weak. And it kind of is a sign of weak demand overall. Some are calling it deflation, and not just deflation in goods, but deflation in services as well. So something we will continue to talk about here over the next, couple of hours. For the Nifty, just to circle it all back to what it means, the upside target remains 2150 to about 21,100 levels, which have not changed since the last time we spoke about this on Friday. On the downside, the lows roughly of the last 3 days come in around the 20,850 level, which is about 100 points away from where we are. If that does not break, I would still say that there's unfinished business at about 21,100 in this leg up. So keep an eye out on that one. The lows at about 28.50. For the Nifty Bank, it broke above the swing high of 47,260. That happened on Thursday and on more definitively on Friday. The medium-term target for the Nifty Bank, again, stays unchanged. 47,700, 47,750 is that particular number, which is the medium-term rising trend line, which the Nifty Bank has got to get to. And the Nifty Bank, by the way, if last week is any indication and HDFC Bank is an indication, is only starting to get a little warmed up for perhaps bigger things. The GIFT Nifty is indicating an absolutely flat start, half a point change. Sonia.
Oh, this is a big week, right? I mean, there's lots happening this week. There's the US FOMC policy. There's a lot of IPOs coming out. There is the CPI data as well. So it's an action-packed week in terms of a lot of market cues. But what are we watching out for? Well, the big cue for me this week is, of course, the US Fed policy. Now, there is no expectation of any rate change this time around, but any indication of the easing of the monetary policy is something that the street will definitely latch on to. Whether it comes or not, time will tell. But, the commentary from the US FOMC, the US Fed officials will be crucial to watch. The big question, right? When will the Fed start easing their monetary policy? Something that the street has started to factor in already. The Nifty hit that 21,000 milestone last week. And given the cues that we have, you get a sense that this uptrend is something that can continue. Global cues are strong. The S&P 500 closed at a 2023 high. The Dow, in fact, was up 130 points on Friday. But this year so far, the Dow is up almost 10%. But look at the other indices. The S&P 500 is up 20% this year so far. The Nasdaq is up almost 38% this year. So it's been a super year for most of the US indices. There was large buying that we saw from foreign institutions on Friday as well, 3,600 crores. And put together, FIs have bought over 11,000 crores in the cash market so far in this month. You have IPOs as well coming through, right? So there's pencil maker DOMS. It's 1,200 crore IPO, opens day after tomorrow. So we'll keep an eye out on that. And there are plenty others in the primary market as well. But all in all, you'd have to say that this is an important week because you have the FOMC action. And the market could perhaps latch on to that and maybe build on to its uptrend.
Well, we've got a good start to December, Sonia. And in fact, the markets are bracing for a rather good end to 2023. And the Nifty Bank, that's going to play a very, very vital role because that's been off color for majority of 2023. That's showing signs of coming back. The big cue today is going to, this week is going to be the Fed's commentary. And as of now, the street has started cheering good data. That's not what we saw in the past. So now in fact, it appears that the street, from being a little bit skeptical when we get good data, that the Fed will continue to be hawkish. Now they're appreciating good data because they have taken it for a fact that maybe, in fact, we're going to see the cuts in the second half, at least, of next year. So soft landing is what we're bracing for on the global landscape. Now, the flows, the SIPs, they continue to remain very, very strong. And kudos to all of you, because now that flow number, the SIP number, has moved to around 17,000 crores odd. I was taking a look at November 2020 or November 2019. This number was half of the 17,000 crores. So very good going. Keep the faith. You're buying the Indian markets for a long term. Keep that going. The FI flows, remember, in November, they turned buyers and we were quite happy about that. But if you compare us with the Korean market, the Taiwanese index, well, actually, the flows that came into India were relatively lower. In December, though, it's higher than the other markets. So that's showing you the FI interest is back out here. What do they do in the F&O market? Well, they added some longs, they covered some shorts. And in a matter of a week, you see their positioning going from a net short position of more than 50,000 contracts to a net long position of more than 36,000 contracts. In a week, you've seen a 90,000 contract swing. So that's comes up for you on the screen as well. Two strikes have a fair bit of open interest. 21,000 call, 20,900 put. So you just plug in those numbers out there going by the premium. By the way, the Nifty ended higher in Friday's trading session, but the 21,000 call, if you bought it, you didn't make any money because the premium didn't move. That's telling you there is writing at those levels. On the 20,900 put as well, there was some signs of writing out. Then the last few days, when you go to 20,850, the markets have bounced out there, either 50 or 100 points odd. So the last few days, lows should come up for you on the screen, which brings us to the levels then. Let's get those lows up for you. Yeah, so that's 20,850. The levels you're looking at, 20,700, 20,850, crucial support zone. On the upside, since the 21,000 call is seeing a fair bit of open interest, 21,110, that becomes a bit of a resistance zone. But just to sum things up, I want to pull up the Nifty and the Nifty Bank for the past week. After very, very long, you had the Nifty Bank that was actually outperforming the Nifty. And that's very, very heartening because that's, talking about bulk of the index that wasn't, participating, the banking, the financial names. and they are participating. Good news. And HDFC Bank, what do you say about that one? A value stock. Remember, if you're buying the stock, it's a portfolio stock. And it's going to be the one that's going to be a very, very important constituent of the Nifty and the Nifty Bank. And even after this small 6% move, well, valuation-wise, the largest name on the Nifty is still trading at a discount in comparison to its long-term averages. So HDFC Bank is the stock to watch for the remaining of 2023. And dare I say, it could be the stock of 2024 as well. Keep an eye out on that one. After a while, you're seeing some shorts getting covered and genuine delivery-based buying on that name. The GIFT 50 suggests a flattish opening. Maintain a long bias. Near-term stop loss, 20,850.
All right. Well, we'll keep an eye out on those levels, those numbers. It's a big week. It's also going to get quieter and quieter, mind you, as we head into the end of the year. So volumes, etc., as it always happens, will take a bit of a backseat. Before we go any further, let's quickly tell you what's lined up here in the first half hour of the show today. We get you updates from markets across the globe. Ed Yardeni of Yardeni Research will join in to discuss the global trade setup. A little later after that, our research team will get you CNBC-TV18's list of top 10 stocks for the day. At 8:30, we have Prakash Devan joining in with what he likes and what he'd like to bet on right now.
All right, let's kickstart the show with getting you some views on the equities front. We have Chetan Seth of Nomura, who says a hotter than expected US payrolls report did not appear to hurt US equities in Friday trading. He says equity investors in the US are likely treated this report as good news is good news for stocks, i.e. a resilient economy against the backdrop where the Fed will likely embark on preemptive rate cuts and thus engineer a soft landing. He adds, unless the Fed this week manages to come up with a hawkish surprise, the soft landing theme should continue to support some larger stock markets in Asia, ex-Japan, such as Korea, Taiwan and India.
All right, let's get you some views on the rupee as well. B. Prasanna of ICICI Bank says that faster rate cut expectations and easing yields got a pushback from an all-round and better than expected jobs data on Friday in the US. Consequently, the dollar recovered, especially against emerging market currencies, while expectations of Bank of Japan exiting negative rate regime supported the yen. Back home, the MPC outcome was neutral for the rupee, though he expects the rupee to be under pressure from stronger US data, the resumption of portfolio inflows, lower crude and RBI's intervention, which will keep it within a range as he sees it between 83.25 to 83.55 to the USD.
All right, and on the bonds, Prasanna says global yields reversed marginally post a stronger than expected labor data. Commodity prices, particularly crude, softened further owing to weak demand outlook. Local yields, however, continue to consolidate within a narrow range despite the MPC outcome being dovish at the margin. The OMO sales risk remains benign in the near term as liquidity moves back into deficit. He expects bonds to trade sideways with the 10-year benchmark likely to trade in a range of 7.2 to 7.3% range.
Well, we've got a lot of stock-specific action to track for you. We'll get to that in just a bit for now, but let's run you through the list. We're looking at GMR Airports, GMR Power and Urban Infra, Moscow Dock, PSP Projects, Subros, and Lloyd's Metal. They are stocks that could be reacting to positive news flow, while on the flip side, Wipro, Dr. Reddy's, Newland, and MedPlus Health will be reacting to negative news flow.
Ed Yardeni is now joining us, President at Yardeni Research. Ed, good morning. Good to have you with us here on CNBC-TV18. It's always a pleasure. Ed, will the jobs data change anything at all? Because on Friday, we also had the University of Michigan inflation expectations, which were softer, so it kind of balanced it out a little bit, sentiment-wise. So on Wednesday, when the Fed meets, should we expect to hold still?
Well, I think what the stock market has learned is that we can actually see inflation moderate without a recession. We don't have to have a recession in the United States to bring inflation down in the U.S. because China and Europe are doing it for us. China's in a recession, Europe is in a recession. And as a result of that, particularly China, as you mentioned, China's PPI and CPI were both in negative territory on a year-over-year basis, and China's exporting deflation to the rest of the world. And that's actually a good thing for us in the United States. It's a good thing for you folks in India. It's not good in China because they have a property bubble that's burst. But as a result of that, their goods prices have been deflating, and that's helping to bring inflation down in the rest of the world.
So what are you expecting from the US Fed in terms of commentary, Ed? Because the indication is that the Fed could begin cutting interest rates earlier than what the market is anticipating. What are we looking at in terms of a timeline? And do you think there could be any hint of that at all in the policy this time around?
Well, I do expect a hint, and I think what Fed Chair Powell will say, because I don't think he'll say it in his prepared remarks, but he undoubtedly will get lots of questions from the reporters at the press conference on Wednesday. And I think the reporter will say, what's it going to take to have you folks cut interest rates and by how much? And I think what Powell will have to say is that if inflation continues to moderate, he'll have to acknowledge that it's coming down. And I expect that the CPI on Tuesday will confirm that. If so, then I think Powell will say that if inflation continues to head down towards our 2% target next year, then we will most likely be lowering short-term interest rates. Because if we don't lower the federal funds rate and just keep it here, and inflation continues to moderate, they would actually be more restrictive. So I think he'll acknowledge that. At the same time, I think he's going to want everybody cool their jets. He doesn't want to see too much optimism about the Fed lowering interest rates, because I think they want to maintain restrictive interest rates to make sure that inflation stays down. And that's perfectly fine if the economy remains resilient, which I think it will.
Hi, Ed. Good morning. What about the Indian markets? Well, we are thumping the table because political stability is likely to continue. Maybe the US Fed is done with regard to those hikes in interest rates. And crude oil prices, it's tried a couple of times this year to move around that $100 per barrel. That's not happened. So for us, it's a Goldilocks scenario that's playing out. What about the Indian markets? How do you think the globe is approaching it?
Well, I think if you make a checklist of what could go right, I think we're checking all the boxes. We're seeing that inflation is moderating worldwide and in India because oil prices are down. We're saying that the Fed's done raising interest rates, and people are talking about how low interest rates will go next year. I think the one thing that still is not in favor of emerging economies generally is weak commodity prices, but India is not a major exporter of the kind of commodities that matter for the economies of China or others. It's more like Brazil and Chile, and it's things like copper and things like that. So I think India is actually a beneficiary of the deflation coming out of China. And then, of course, there's the political stability issue that I think that box got checked as well. So it's looking pretty good.
All right, looking pretty good. Thanks a lot for joining in, Ed. Appreciate your thoughts here on CNBC-TV18. Let's slip into a quick commercial break. On the other side of the break, a lot of big stocks lined up. What are the cues you need to watch out for? Everything coming up in just a bit. Stay tuned.
CNBC-TV18, embarking on a quarter century of excellence.
Stock market, huh?
Embarking on a quarter century of excellence.
Well, let's begin the day with a lot of big stocks to watch out for. First up, Wipro on our list. Reema's here to tell us why you should be looking at that one. Reema, morning.
Hi, good morning. So we're watching Wipro because there has been another senior level exit. On 8th of December, the Chief Growth Officer of Wipro, which is Stephanie Trotman, she had joined about 3 years back, has announced that she's stepping down for personal and professional reasons outside of Wipro. And her last date of employment will be 31st January. What's compounding the problem for Wipro is not just one exit, because this follows a spate of exit. The last, the notable one was Jatin Dalal, who was a long time serving CFO of the company. He had stepped down in the month of September, and that list will come up for your new screen, how the head of healthcare, the CFO of America 1, the CFO of America 2. There have been multiple senior level exits for the last couple of months at Wipro, and this one has just been, as we wrap up 2023, even the Chief Growth Officer of Wipro has stepped down. Back to you.
Okay, all right. Thanks a lot for that, Reema. Well, let's hop across to Ekta. She's here to tell us about Dr. Reddy's and those observations that we were flashing for our viewers on the screen. Ekta?
Well, thanks for that. Antique has written on it. They maintain a sell with a target price of 4766 on Dr. Reddy's. They've said that basically the 10 observations could see an escalation. Now, just to put it into perspective, the facility contributes around 30% of the company's US revenue. It manufactures 4 of their top 10 products. According to Antique, some of the observations were severe, can lead to a warning letter. Observations include 1, 2, 4, 5, 6, 8, 9. So for people who do have the Form 483 can go through it. It has highlighted issues such as out of specification, which means that the drugs did not meet the specification which was required. Contamination, data integrity, market complaints. So FTO 03 remains one of Dr. Reddy's critical sites and manufactures over 100 products, and hence that stock could be under pressure in today's trading session on fears that there could be an escalation to a warning letter for this particular facility.
All right, Ekta, thanks very much for that. You know, on Friday, GMR Airports was a big talking point. And of course, we broke that story, Nimish, about the big investor who's come in. But GMR Airports and GMR Power should be in focus once again this morning with more news. Vivek is standing by with that. Vivek, hi, morning.
Well, absolutely. Number one, it's the confirmation of the CNBC-TV18 News break. Our colleague Nimesh told you that, GQG Partners has actually come in, and along expected lines, the GQG Partners has, number one, picked up 1.67% stake. Along with that, Goldman Sachs Trust, which again, GQG Partners International Opportunities Fund, has picked up an additional 3.4% stake. Who are the major selling shareholders? The non-promoter shareholders. So that comes in as a bit of relief. Now, the second piece of news that is coming, quite important as well. In the Goa airport, the user development fees, both for domestic as well as, international airfare has gone up. And along with that, this has come in both for embarking as well as disembarking. So, some additional revenues will come in for the company on the back of hikes of 9% and 2% respectively. And thirdly, GMR Visakhapatnam Airport, the Bhogapuram International Airport that the company would be developing. For that, the company has tied up the entire financing. So 3,215 crore is what the company has tied up. The total project cost is 4,727. So a lot of positive news flow coming in for GMR, the airport arm. Now, talking about GMR Power and Urban Infra, reports indicate that the company is in talks with investors to raise close to $100 million, close to 833 crore. This is for funding mainly to enter and execute the smart metering projects that the company has won.
Okay, all right. Thanks a lot for that, Vivek. Well, let's focus on Lloyd's Metal and Energy. The stock, remember, has been a big multi-bag in the last few years. From the brink of, too much of debt, suddenly they came back in style. After the correction, though, the stock has recovered close to around 10%, I think, in the last few trading sessions. Last 1 month, in fact, it's up close to around 17%. Now, the news that came over the weekend is that the board has gone ahead and approved a few factors. One is raising the iron ore mining capacity to around 55 million tons. So that's good news. The second factor is they're looking at setting up a steel unit of close to around 3 million tons odd. And the third factor is earlier they announced a 4 million ton pellet plant. Now they're doubling that. They're talking about an 8 million ton pellet plant. So all those three, well, they are expansions that they're looking at and looking at forward integration. So I'll read that positively. And they've also, if you take the cumulative Capex that they've lined up, it's close to 25,000 crores, which will be spent over the next 6 to 7 years. But they're saying all of this will be done via internal accrual. So expect the stock to continue its upward journey.
Okay, well, there are plenty of other stocks that are in the news this morning. Ekta has the fine print for us. Ekta, what are you looking at?
Well, yes, I'm looking at two stocks from the pharmaceutical space again. Newland Labs, I'm watching that one. Maybe the stock could be in the red because the promoter, Dr. Rao, has sold around 3.12% stake in the company via the open market at around 5,012 rupees per share. Remember, he's the founder, promoter and the executive chairman of Newland Labs. The shares sold are worth around 200 odd crores. The funds are going to be used for personal purposes. There's no sale, according to him, likely in the foreseeable future. The commitment is towards Newland Labs. The promoters hold 35.97%, and the reason is because the stock has run up significantly. It's up around 2.3 times in the past 1 year. It's rallied around 3.2 times from its 52-week low. So no surprise that the promoters would want to take some money off the table. It'll be interesting to see the stock movement based on that today. MedPlus is sentiment red probably because the subsidiary of the company has received orders from the Drug and Control Authority, where it has been issued by the Drug Control Authority of Andhra Pradesh as well as Telangana. And for Andhra Pradesh, for both of them, it's letters on violation of various conditions of licenses. So the drug controller of Andhra Pradesh has suspended their drug license for 7 days, And of Telangana, they've suspended their drug license for 3 days. Expect that stock to see some amount of pressure today.
All right, thanks a lot for that. Well, Vivek is also with us actually. He has a list as well. Vivek, what are you looking at?
Well, that's right. Quite a few order wins coming in. So first on our list, Mazgaon Dock. The company has received an order from ONGC. This is for a part replacement of a pipeline project. Total cost of this particular project is 1,145 crore. Order will be executed by 15th of May 2024. Second stock on our radar, PSP Projects. The company has emerged as an L1 bidder, or the lowest bidder, for a Gujarat project worth over 295 crore. So now the company's total L1 pipeline is over 1,060 crore. And lastly, Subros, watch out for this particular stock in trade. Number one, the company has received an order worth 25 crore from the Indian Railway. This is for supply of air conditioners. Additionally, the formal notification too has come in from the Indian government, making the truck cabin mandatory from October 2025. So on the back of that too, there could be some sentiment positive coming in for Subros today.
Okay, thanks a lot for that. Here's a quick recap of our top stocks with positive news flow. There's GMR Airports, GMR Power and Urban Infra, Mazgaon Dock, PSP Projects, Subros and Lloyds Metals and Energy. While stocks with negative news flow this morning, there's Wipro, Dr. Reddy's, Newland Labs and Med Plus Health. But there are some brokerage notes that you need to focus on as well. So Hormuz is here to give us the fine print on that. Hormuz, good morning.
Morning, Sonia. And I start off with MedPlus, and Ekta highlighted some news updates for that. But Nomura has maintained its buy rating on the stock and has increased its price target from 952 earlier to 974. And it says that some of its initiatives that it has undertaken, like introducing generic medicines at a discount and expanding its diagnostic footprint beyond Hyderabad, and its subsequent impact on its near-term earnings are some of its key concerns. But it says that although these strategic initiatives are right, it says that it will need a gradual implementation for its successful execution. Now, steel stocks, they have been underperformers in 2023, and Morgan Stanley expects this trend to continue in 2024 as well. Now, it has cited weak global macros, domestic supply being more than demand, and unattractive valuations as the factors behind this move. And it says that the China stimulus may not improve domestic demand materially, and although a strong demand recovery in China and sharp inventory destocking are some key upside risks. Now, Morgan Stanley remains equal weight on Tata Steel and SAIL, while it is underweight on JSPL and JSW Steel, with a modest increase in price targets for all four of them. And lastly, Wipro, which has seen another top-level exit, as Reema was highlighting, and Morgan Stanley believes that it is a matter of concern because the chief growth officer had a key role to play in managing the large deals team at Wipro. Now, Morgan Stanley is underweight on Wipro with a price target of 370 rupees, which is one of the lowest on the street, and that implies a potential downside of 12% from Friday's closing levels. Back to you.
Okay, all right. Thanks a lot for that, Hormuz. Well, let's go across to Manisha. She's joining to give us a complete wrap-up of what's going on in the commodity markets. Morning, Manisha.
Morning, Nigel. Thank you for that. I'll start with the crude oil prices, where we are looking at strength for a second straight day. But remember, prices did decline 5% in the previous week, and that was a 7th straight weekly decline. Well, the markets do not think that there's a lot of output cuts coming in from OPEC. And in the meanwhile, there is weakness in demand from China and near record production from US as well. But the recent support comes in on the back of the US looking to replenish strategic reserves by 3 million barrels by the month of March 2024. Also, there are statements from China officials pledging support to domestic demand, and that seems to have done the trick, is the reason you're looking at prices back above $70 a barrel there. But it's not so great news for the metals as a sector. The gold and silver prices have continued to decline. This is going to be yet another weekly start where we also have seen copper and steel prices decline. The only thing that actually seems to be doing well is coal, trading above $150 a ton, and the iron ore prices, after gaining nearly 7% in the previous week, have started this week on the positive note as well.
All right, Manisha, thanks very much for that. That's Commodities in Focus. We'll take a very quick commercial break here. Prakash Devan will be with us for some fundamental stock talk. So we'll talk to him about the areas he'd like to bet on as we start a fresh new week. Stay with us.
CNBC-TV18, embarking on a quarter-century of excellence. Embarking on a quarter-century of excellence.
Welcome back. You're tuned into Bazaar Morning Call. Well, we have listed all the top stocks for you. Let's get some fundamental analysis going, though. Prakash Tiwan joins us on the show. Hi, Prakash. Good morning. Thanks so much for joining in. Prakash, tell us about the GMR group. You know, your GMR Airports, where you had a large fund, GQG, coming in there and taking a big chunk. The stock rallied big time. What's your view on that one? And also the other one is GMR Power and Urban, which is into smart metering. They're talking about a fundraise. Have you looked at that one? Your view?
Good morning, Nigel. So, GMR Airports, we spoke when Nimesh broke this news, story. And just imagine a marquee investor putting less than 2% and things kind of can fire up so much. That is exactly the potential of this particular area of interest for people. Airport infrastructure is just bound to go. And anybody who's taken a flight recently can tell you that all airports are chock-a-block. There's enough volume growth and enough pricing power that's coming back. So I wouldn't be surprised if, the way the Mumbai airport has always managed to fetch a premium in terms of pricing, that same kind of a thing could get replicated across the more popular ones for GMR. So, I think it's a very positive space, but the stock has run up. So, as I said earlier, you will have to wait for a decent level to get in, so the risk reward is favorable. On GMR, urban power and urban infrastructure, I think it's a big change that's happened is with the GMR energy consolidation. They've hiked their stake to 87%, so it's no more a JV, but it's actually a subsidiary, which means all the business that GMR Energy has been doing will start kind of adding up to the balance sheet and the P&L of GMR Urban. Now, that is something which is very interesting because all their hydro projects, their thermal projects, all of those which were languishing because of the kind of timing that they got into is kind of getting corrected. They've also, had a significant debt reduction. So I look at that very positively from a turnaround perspective. You'll have to give it about a year's time. But what's happened to a JP, what's happened to some of the other beleaguered power projects, this is something which could revive in a very decent way. So the fundraise is timely. They would need fund to get deleveraged further and be able to expand wherever they've already built capacities. They can start utilizing that into the distribution grid wherever they've got capacity. So quite positive on that. This is the stock to look at from the family rather than the airport because the airport's already gone away. This is something which should probably get in the news more often as I expect.
Okay, that's on GMR Infra. GMR Power suddenly come back in the news in a big way. The other big comeback is expected from a bank like HDFC Bank, right? Anyone and everyone is talking about how it could really take the Nifty higher in the next leg. Would you concur with that view? And is this a good time to be buying into that stock?
Good morning, Sonia. So I definitely feel the HDFC Bank stock could take a portfolio higher as well, given the fact that it's, it's sitting right at the top of the most undervalued private sector bank when everything positive is being heard about and anticipated for the banking sector as a whole. I mean, just imagine from the time they cautioned about some of the metrics being softer post the merger, the stock was just kind of avoided. Everybody just got out thinking there's no timeline to effect in terms of where things could improve. And in the last 15 days, what's happened is certainly they've realized the kind of potential when you buy an HDFC Bank at sub 2 price to book, where it's always been about 4.5. It's very clear that this 150 rupees jump, this 10% move from its lows, is actually smart money that's already coming in. And something from here on, what could happen is in the next 6 to 12 months, it could actually give you a 30-40% of a move just because it's resetting itself. So there's no specific trigger it needs. Even if it makes a comeback and comes to its original space where it was always there in some of the key verticals, particularly trade finance, personal loans, I don't see any reason why it could be, higher than 2,000 rupees in the next 6 to 12 months. So it's a great bet. You actually have hardly any risk from here on. And the reward definitely is very positive given the fact that the metrics are falling in place.
Metrics are falling into place. Any thoughts on Wipro? Prakash, hi, morning. There seems to be a little bit of shake-up right at the top. Now, you can read it to say that so many senior leaders have left over the last 12 months. So it bodes uncertainty. You can kind of look at it from another point of view that, maybe the promoters are waking up to the continued underperformance and maybe are starting to do something about it. Your thoughts?
Good morning, Prashant. Absolutely. I think. See, these kind of exits that happen, primarily when you have somebody who's heading the finance function, I remember Mr. Dalal moving out, announcing that he's moving out, was a bit too abrupt. There's no transition plan that is still in place. I mean, we've seen how Wipro transformed itself just before COVID when, it's got the new leadership. But, styles of functioning, the kind of aggression to growth, the ability to get into newer segments, which a lot of the key players, functionaries in the company would want to see the company get into. If that's not happening, there's always some questions that will be raised. And remember, there's so much opportunity for people in the CXO level in top IT firms that it's so easy to kind of, look at something which is more aligned to your personal ambitions and goals. So I would believe this is a whole series of exits that's kind of going to cause a little bit of a rethink. How soon can the management promoters bring in that kind of a change? I'm not too sure. But then you have far better opportunities to look at within IT. So Wipro would probably have to pay the price on this on the script, at least in terms of interest levels from investors. I mean, there's no value investing that would probably come in because there are reasons for it to be underperforming, and that seemed to be a bit more sustainable.
Okay, Prakash, I wanted to ask you about Subros as well. The government has made AC truck cabins mandatory.
Yeah.
We've been hearing about this for the last few months as well. Now they're talking about October 2025. The stock as well has done pretty well. What's your view at around 450? Bulk of the good news in the price or more to come?
Oh, absolutely. Not yet, Nigel. I think, the notification that's come in was actually taken up sometime in July of this year. So it's taken almost like 6 months for it to see the light of the day. And of course, the OEMs needed time to kind of realign their designs to be able to do it. And, if you see it in line with what, let's say, Tata Motors has announced, that with effect from 1st Jan, there's going to be a slight hike in the CV prices. Now, what's going to happen is all this pricing will have to, this incremental pricing will have to get passed on in a way that's, that's not going to dent the market share or the demand side. So Ashok Leyland, Tata Motors, Volvo, all of them would have planned this out in the last 6 months because this was a given. Now, Subros also has a railway trigger, which Vivek just shared with us a while back. Now, remember, they've been supplying a lot of, driver cabin air conditioning in locomotives. This is the rooftop locomotive, which is a huge opportunity. Of course, it looks like a very small order at the moment, but I think that given the ability to do air conditioning with mobility combined, they could be sitting at a very big order book from here on. We'll of course have to wait for them to share all of that. They have an analyst meet today evening, which I'm very keen to listen to. But I think it's at 450, 3,000 crores market cap, 2,800 crore sales last year, and these 6 months have been so good. I don't think it's all in the price. There's still lots to go, provided we see visibility of that translating into revenues.
All right, so we're also going to be keenly awaiting the details from that analyst meeting, but it's had a fairly strong run. It's a 50% rally that we've seen in the last 6 months for Subros, so the going is good. And of course, now additional fresh news coming in on that counter. But let's do one thing. Let's step into a quick break. On the other side of the break, how do you approach the markets as we head into a brand new week of trade? Anuj will be with us to help us with the trade setup. Stay tuned. Post that, we'll bring you the top stock picks for the day from our technical and F&O experts coming up in a bit.
CNBC-TV18, embarking on a quarter century of excellence. TV18, embarking on a quarter century of excellence.
Okay, welcome back. We got the pre-open, which is about 14 minutes out. Anuj is here with a quick look at how he's looking at the trade setup. Anuj, morning.
Morning, Prashant. It's been a very strong month for the market, and large caps have started to make a bit of a catch-up. I'm just looking at what the markets have done. This is this month and this year, and the Nifty is up 4.2% this month, mid-cap up 3.5%, and small-cap up 1.8%. So there's finally some catch-up, because even after that, if you look at the yearly moves, the Nifty is 16%, is still trailing far behind the mid-cap and small-cap, which are at 41 and 42% respectively. So perhaps some more to go for the large caps. And if this FI buying continues, which has been the case for last many days, except one, there's possibility that this continues. As I said, barring one day, out of the last 10 days, there's been FII buying. Even on Friday, you saw that big buying. Of course, there was that big block as well, but even then, that's also money coming into the market, right? The other thing to focus on is that if the FII money comes in, then where does it go? 5 of India's biggest stocks have underperformed. If you look at biggest of them, Reliance, for example, is down 3.5%. That's excluding Geo Financial. But even if you add that, there's underperformance. TCS 11%, HDFC Bank 1.4%, ICICI Bank 8.7%, Infosys is actually down 5%, and Lever is down 7%. And this in a Nifty which is up 16% for the year. So maybe some catch-up could happen here. In the trade setup, the one thing that stands out is FII's and the index futures data, because now we are net long. 58% positioning on the long side and 42% positioning on the short side. It's the first time that FIs are long since October 1. That was the time that they went short, and since then they have been short, and now they're net long. Now coming to the outlook for the day, on the Nifty, there's first resistance at 21,006, which is Friday's high, also the all-time high. But I think the bigger resistance comes in at 21,167 based on the options. And support area is 2850 to 2860. Just look at the lows of the last 3 days. Every day the market's bouncing from this zone, 2852, 2851 and 2862. That's the low of last 3 days if you see the table. So that's something to watch out for. Quickly on the Bank Nifty, it started to outperform the Nifty. This month it's up 6.2%. versus 4.2%. But remember, this year it's again comparatively underperforming, up only 10% versus 16% for the Nifty. And main reason for that is HDFC Bank. So let's see if there's some more catch-up play which happens, especially if FIs start to buy again.
All right, Anuj, thanks a lot for joining in, and thanks for, prepping us up for trade. We have Mitesh Thakkar and Sudarshan Sukhani joining in now to give us their view. Sudarshan, good morning. 21,000 on the Nifty. Big milestones are here. You think we can build on to it as we head into the last couple of weeks of the year?
Yeah, good morning, Sonia. I think we can build on that 21,000 and cross it and probably close higher when the year ends. So the trade is very easy and simple. And sometimes it becomes boring, just buy and make money, and that's so boring. But that's the trade. Buy every dip in the Nifty and in the Bank Nifty, and it's difficult to define a dip, but broadly, a 70 to 80 point decline from the opening price would qualify as an intraday dip. Stay on the long side.
Okay, stay on the long side. Got it. Mitesh Thakkar is also with us. Mitesh, do you agree that continue to keep your long positions going? And if yes, what are the individual stocks that we're looking at this week?
Good morning. Yeah, I think there's no need to sell as of now. I think both the indices, the Nifty and the Bank Nifty, made a fresh swing high this week, and both of them did with a opening gap up because purely of the election results. So I think that gap suggests that this breakout should see further highs. I would pencil in targets of 22,000 plus on Nifty in the next couple of weeks, and possibly 49,500, 50,000 on the Bank Nifty in the next few weeks. So I'll maintain long positions, also use declines to buy into. And on the stock side, I have 3 buy calls to a sell call today. On the selling side is Torrent Pharma, which I would recommend selling with a stop at 2075 for targets of 2,000. But that apart, all buy calls. Bharti Airtel, buy with a stop at 985, look for targets of 1,030. HCL Tech, buy with a stop at 1340, look for targets of 1,400. And Motherson Sumi, that's a buy with a stop at 93 for targets of around 100.
Okay, all right. Sudarshan, what about you? What are your picks for today?
Well, Persistent Systems is a buy. The stock was consolidating and finding significant support. Buy with a stop under 63.50. PEL is my only intraday short. The stock is in a bear market. It's an intraday short with a stop above 950. Coforge is a buy again. It's after that big 2-day rally, it's been consolidating, which is normal, and now breaking out of that consolidation. Buy up with a stop under 56.80. And finally, Bharat Forge had that stupendous Nifty-like rally. 5 days it's paused, and the pause is likely to resume on the upside. Buy with a stop under 1160.
Okay, got it. Mitesh, so the one area is sugar, which sold off big time on Friday, right? Sugar, and then, something like a Praj as well. How are charts looking there for the larger names? The Balrampur, Dhampur, of course, Praj as well.
So, Prashant, I think, very clearly a news-driven movement, but the fall and the intensity of the fall in the last 4-5 sessions has changed the trend on the short-term as well as medium-term basis. So I think all these stocks are looking negative to me. For example, Dhampur Sugar, it's also broken the 200 average. It's also gone into a downtrend. I would look at targets in the worst case scenario of 205 to about 210. Similarly, if you look at the charts of Balrampur Chini, the first support comes in at about area of 380, which is where the stock was consolidating in July. But if that breaks, and there's a good chance of that happening, then I think we are looking at targets closer to about 350, 55. So I think there is a good amount of downside still left. You might get a 1 or 2 day of pullback given the fact that the last week was a massive red candle, but the direction is on the downside.
Okay. Mitesh, before I let you go, just one more pack. The Adani Group stocks, right, had a Friday to Friday, all these stocks are up 30-40% still. But on Friday, we saw some pullback, some profit taking, 4-5% kinds across the board. I mean, how is this one looking?
I think to me in the short term, all these stocks look very good. Again, the Friday, in fact, even on Thursday, these stocks were subdued. That movement was possibly as a reaction to the first 2-3 days of rally in the in these stocks. I think the best which I like is Adani Ports made a fresh swing high recently. I think any pullbacks to about 980, 975 zones would be a buying time for me with a stop below 950 here. And I think the stock can scale up the highs of 1080, which it tested on the 6th of December and make a new high. So very bullish over there. That about Ambuja Cement is also on the buying radar. In fact, we had a call before the movement started last week there, but I think the pattern still suggests more upsides over here. So that's a buy with a stop below 475, 474, and look for targets of around 540.
All right. Well, let's do one thing. Let's take a quick commercial break. Thanks a lot for that. We'll come back with the pre-opening. We'll also have Biju Samuel of Elara Capital to put focus on the market breakouts and how you should approach it. Stay tuned.
CNBC-TV18, embarking on a quarter century of excellence.
Go powered.
CNBC-TV18, embarking on a quarter century of excellence.
Welcome back. You're watching CNBC TV18 in the Motilal Oswal studio this morning as we kick off a brand new day of trade, a brand new week actually. Chandan Taparia, who's a derivative and technical analyst at Motilal Oswal Financial Services, is with us. Chandan, hi, good morning. How are you feeling about the market now? Do you think we can build on to this uptrend? And if yes, what are the spaces to look at?
Good morning, Sonia. Thanks for having me. We have seen a tremendous rally in the indices in last 5-6 weeks. Nifty has rallied by more than 2,100 points in just 30 trading session, all the way from 18,838 to 21,000 marks. And momentum is intact. On weekly chart, we are forming high rise, high lows. Even on the weekly chart, we have given a fresh breakout of rising channel and supports are shifting higher. However, mechanical indicator might be showing overbought, but trend is intact until immediate supports are respected. This momentum could continue. If I look at the derivatives data setup, put call ratio is holding well. India VIX is near 12.5. FI's long short ratio on index has gone to 55%. So all these internal with support from global markets are indicating momentum could continue. So we believe that till Nifty holds above 20,750, 20,800 zone, this rally can extend to us 21,250 or even higher levels. Talking about Bank Nifty index, we have seen good momentum in the Bank Nifty. This index was earlier underperforming, now started to outperform. In last 30 trading session, we have seen rally of more than 5,200 points, all the way from 42,100 to now 47,300 marks. And we have seen some outperformance on last trading session, and most of the private and PSU banks are doing well. So expecting some outperformance in the banking counter with support of 46,666, one can look for a fresh leg of rally in Bank Nifty towards 48,000. Now looking at the stock wise, first trade will be buy on ICICI Bank. We are positive on the Bank Nifty, and most of the banking stocks are showing strength, including ICICI Bank, HDFC, Axis Bank, SBI, Canara Bank. Here I have selected to be with ICICI Bank. The stock has formed a positive price pattern. Supports are gradually shifting higher. Better delivery volume with put writing activity indicating positive move in the counter. So one can buy ICICI Bank with support of 995. Here we have target to 1,050. Second trading area, there is buy on HCL Tech. Selective IT stocks are doing well, and HCL Tech has given a breakout from its narrow range price formation. Even rounding formation on daily and weekly with gradual shift on the support indicating momentum could continue. So one can buy on HCL Tech with support of 1340. Here we have a target towards 1430 level. Last trading area, there is buy on Titan, one of the strongest counter, already trading at lifetime high territory. Longs are intact. We have seen earlier positive rollover. Even mechanical indicators are holding the strength, and shift of the support also indicate further up move. So recommend to buy on Titan with support of 35.75, and this rally can extend to us 37.80 to 3800 zone.
All right, thanks a lot for that. Have a great day and a good week ahead. That is Motilal Oswal with the FNOQs. But let's get to the momentumizer stock of the day today. Rima has the latest for us. Rima, what's on your radar today?
So the stock on my momentumizer list today is Z Media, which had a big spike in Friday's trade. The stock was up 11%, and now it's very close to its 52-week high of 17.45 that it had hit exactly a year back on 16th of December 2022. In fact, the stock has not done too much. Year to date, it's up 15%. In the last 1 year, it's up close to about 10-odd%. But now, with the up move that we had yesterday, it's very close to its 52-week high. Volumes were on the larger side. So on Friday, volumes in BSE, NSE combined was close to about 6 crore shares, which compares with an average of 1 crore shares. And on Friday, the shares marked for delivery were about 50% of the overall turnover, 3 crore shares versus a 1-month average of about 50 lakh shares, which are typically marked for delivery. So big spike up and on very, very large delivery volumes too.
All right, thanks a lot for that, Rima. Well, that's right. Towards the end of trade, we did observe that on Z Media, one of those stocks that have done a big move. I think just pull up the last 1 month chart or so. It's moved, I think, from around 12, 13 rupees all the way to around 17 rupees. Mitesh, any view on this one, Z Media?
Well, I do like the stock on the longer term charts. I think it's heading towards levels of 19.5 and in the best case scenario, even 21.60. So this remains a buy. I think the only thing is that because of the rally, you might want to accumulate it slowly. But I think now anything between 16 to about 15.80 would be a very good choice. And just keep a stop loss below 14.80. I think this is heading towards 21.5.
Okay. Do we have Biju Samuel? Okay, Biju Samuel is with us. Mitesh, thank you very much for joining us. Good speaking with you, and we'll come back to you for more in a bit from now. Biju Samuel is joining us from Elara Capital. Biju, of course, is the technical and quant strategist at Elara. Biju, good morning. Good to have you back on the channel. Prashant this side. Your sort of latest note talks about thrusts higher for global markets. I mean, you talk about the S&P, you talk about the Nifty 200 index, you talk about the Nifty in dollar terms. Just provide us with the broader sort of view here. We are at all-time highs. The market has done phenomenally well last week post the election outcome. Is this going to continue in an uninterrupted way on the way up from here? Go on.
Yeah, hi. For our framework, one of the key catalysts is, are we getting signs of, the bull market conditions, some catalysts on the global side. And that we started getting from on the 1st of December, actually, for a new leg. S&P, around 58% of the stocks in S&P, they've created a breakout on 1st of December. That's a starting point for a complete new bull view on the entire big picture. We were a bit cautious since July. We were looking for a shakeout. It did happen very briefly, but it didn't happen the way we were trying to read, actually. But 1st December, it happened for S&P. And before that, somewhere around middle of November, the global big picture started changing, starting with Europe and I think the entire Fed pivot situation. So India on 4th of December, last Monday with the election results, India has also joined that thrust. This is what we call a breakout thrust, when there is a large concentration of stocks breaking out. So we got around 59% of the Nifty 200 stocks breaking out on Monday. So this is actually the 8th such incident in the last 10 years or so. Out of that, only in 2019 it failed to give a big move.
Okay. All right. Hi, Biju. Good morning. Nigel on this side. Biju, I wanted to ask you about the PSU banking names. That's hit the highest level I think we've seen in the last 10, 13 years or so. And it's been the big outperformer for this year, the last 2 years as well. The question is, can it continue to outperform for the next, 1 to 2 years? Do you think that's the sector that still has plenty of juice still left?
Yeah, actually, as you know, as is obvious, the public sector enterprises are seeing a huge acceleration. The thing about is we've seen a lost decade of almost 14 years, I would say a 14-year one was in that entire segment. So within that, the PSU banks are a bit, late entrant, I would say. And it has just started taking out the 13-year back, the all-time high. It's just created a new all-time high. So I am finding this pocket of PSUs to be one of the juiciest at this point, actually. You've seen a 10-year bear market from where, the things have evolved into a new bull market. And this is another stone reasserting that long-term bull market, which could be looking at the next 2 to 3 years.
All right, that's very interesting actually. So you're saying that there is more juice in the PSU banking space and you could see an up move here. But within this space, do you stick to the larger guys like an SBI, a Bank of Baroda, or do you look outside the index as well? Because that has been a bit of a tricky area, right? It hasn't given great returns in the past.
Yeah, earlier when we had a situation in the market recently when the large were not joining or large caps were not actually participating aggressively on the bull run which was on. That picture is what is changing here. So first of all, my sense is that the PSU banks over the long run will outperform the private banks because we've just come out of a decadal bear market. One thing, I think SBI, that was disappointing, and the second run, third run were actually outperforming in PSU banks. Now SBI also looks better poised. One thing about the large cap side, for example, SBI within PSU banks, SBI had seen 10 years of not going anywhere from 2010 till 2020. There's a decadal sideways movement from where it has come out. And the last time SBI had seen such a decadal, sideways action was 1993 to 2003, which became, the ground for a massive bull run from there. But that was 03 to 08, that extraordinary bull run. But we have the second largest big base situation in SBI, that from where it has come out 2 years back. So there is a structure there.
No, I got that. For SBI, I got it. My question was more that do you just stick to SBI or do you look outside as well? And if not SBI, where else do you see maximum potential in 2024?
Yeah, see, now that the macros are far more favorable, so the PSU banks, I think, are better. The background is getting much better. So obviously, some of the big downs will have a huge outperformance. The most beaten down, for example, was PNB. So you can have a massive room because now the entire macro is favorable. All the stars are better aligned here.
All right, we'll leave it at that. Thanks a lot for joining in and appreciate your thoughts here. Well, I just wanted to get a couple of rates in, the pre-opening rates that will, start kicking in. In fact, they've kicked in right now. Absolutely flat on the headline index, but a couple of stocks do deserve mention. Oil marketing companies are in focus. BPCL is up about 1%. ONGC, Adani Enterprises, ITC looking good. Dr. Reddy's is the one that is really taking a knock this morning on the back of that US FDA note, where a couple of analysts do believe that, there could be negative connotations, and some of those observations of the US FDA are quite severe. So Dr. Reddy's is in the red, deep in the red right now, 5% lower, while Wipro is the other one that's down about 0.5%. Another senior exit from Wipro. The Chief Growth Officer, Stephanie Trotman, has stepped down. So these are some stocks not looking good. But let's go across to Sudarshan now to find out what the big call is at 9:10. Sudarshan, over to you.
Well, consider buying Persistent Systems with a stop under 63.50.
All right, and Mitesh, what about you?
I'll go with the long on Bharti Airtel. Keep a stop at 985. Look for targets of 1,030.
All right, Mitesh, thanks very much for that. Well, I think the pre-open rates are up on your screen, and I think they are. The Nifty is down 4 points. The sensex is absolutely kind of showing a 100-point uptick. I think we'll have more on this one. I think the rates will settle. It's not going to be a 100-point up sort of start up. Perhaps a more subdued kind of start is what we will get in just a bit from now. Vivek is standing by with GMR Airports, which should be in focus after Friday's sharp move. Vivek, take it away.
Sorry, Vivek will be with us in a bit. I think Ekta is there before that, but you like to talk about the good news rather than the bad news, right? So Ekta is providing some bad news to us.
Ekta, sorry, go on.
Well, yes, it is a little disappointing in terms of Dr. Reddy's because the 10 observations which were issued to their Bachupalli facility, which was inspected in the month of October, has now been made public. So Antique has written on it. They've maintained their sell with a target price of 4766. According to them, particularly this facility is important because it contributes around 30% of the company's US revenue. They manufacture 4 of their top 10 products from the Bachupalli plant. Now, Antique says some of the observations are severe and can lead to a warning letter. They have highlighted that certain observations have brought up issues such as out of specification, contamination, data integrity. Observation number 7 is probably, linking it to data integrity, market complaints as well. And this particular facility, they have emphasized, remains one of Dr. Reddy's critical sites, manufacturing over 100 products, and hence an escalation to a warning letter would be negative for Dr. Reddy's.
Right, got that. Thanks a lot for that. Well, GMR Airports, actually, in case you've missed out on the news flow, Vivek is here to give you the latest on that. Vivek, over to you.
Well, when we are talking about GMR Airports, remember on Friday post over 12% equity block deal, we had reported that GQG Partners was one of the top investors along expected lines. Over 5% equity has been bought by GQG Partners in a couple of fund names. Now, along with that, a couple of important updates as well that the company has given the exchanges. Number one, a tariff hike as far as the user development fee is concerned. Now, this is coming for the Goa airport. So what's actually happened is that the embarking fees for the domestic and international user UDF has been hiked by 10% and 2% respectively, and this is applicable from Jan 1st, 2024. The third important point is that the GMR Bhogapuram International Airport, now this particular airport, the company has received the complete funding of over 3,215 crore. So the first phase of the airport can now be developed by the company. So a lot of positive news flow coming in, could be a top mover even in today's trading session.
All right, thanks a lot for that. Just a couple of more stocks in case you want to take a look at them. Subros bagged that 25 crore order from the railways for ACs, and the government has now made AC cabins mandatory. So it's a big positive for Subros. I would like to pull that stock up on your screen to see what the reaction is. That'll come up in a bit. And then you have something like a MedPlus, right? That's also in focus. Nomura has increased their target price on MedPlus to 974 rupees, and they talk about how MedPlus is expanding their diagnostic footprint, because of which, the stock also could be well in the green. Cyient had an analyst meeting as well. They talked about some aggressive target prices there, so Cyient is in focus too. And Tata Motors will be hiking their commercial vehicle prices. So I guess we have our hands full today in terms of lots of stocks to watch.
Well, that's right. Sonia, it listed at nearly double, and you would have thought, let's take some money off the table. The stock has done even better from there, and currently, as we speak, it's at around 75 rupees. Pre-open, one of the largest volume traders out there. And Rima told us in pre-open as well, keep an eye out on Z Media, because the volumes are very high, delivery is very, very high. That as well is one of the top volume gainers. And just one more name, we were chatting about GMR Airports, but Prakash said maybe he sees that GMR Power and Urban could be the other play, and they could be probably looking at raising some money. That's locked in upper circuit, 5% out there, and volumes very, very high at the bottom of your screen as well. Reports, unconfirmed reports suggest that they could be looking at some fundraise. So some of the stocks on the screen.
Guys, have you, as parents of young kids, do you guys buy stationery? Have you bought DOMS stationery?
I have so many DOMS, unused pencils in my house because of the number of gifts that we've gotten at birthday parties. I don't know about you, but yeah, it's the IPO is opening on the 13th.
Yesterday I opened a full pack of black pencils, DOMS. arms. And by the way, the excitement in the grey market is, the grey market premium is about 70% of the issue price.
Yeah. Wow.
So it's going to be a blockbuster one. I think the IPO opens on the 13th.
I haven't paid too much attention on the names, but I think I should, because I see so much of
That's where the ideas come from, Nigel.
All right, but we have 30 seconds left for the markets to open. By the way, Subros could be the big one this morning. In pre-opening, it's showing me a 17% gain. I don't know if that's going to actually play out. But on the back of, the government making AC cabins mandatory, and that's the main business of Subros, that's a big move that the company is seeing this morning. Anyway, let's take a look at the market opening, which comes up in just about a few seconds from now. The big Q this week, of course, is the US Fed meeting. The decision comes out on the 13th, and any indications of easing of the monetary policy will be watched for closely. But here you go. There's the first tick on the index. Very quiet, but we like that because what we're doing is consolidating our gains at the 20,900 mark. Mid-cap index is up in the green. 125 points in the green. So the market is abuzz with ideas in the broader markets. We'll get to that in a bit. For now, the big stock on our radar is Dr. Reddy's. It's down 5% on the back of the US FDA observations, and some of them could be severe according to analysts. So Dr. Reddy's is the one that's taking it on the chin this morning, down about 5-odd%. The other one that's getting knocked down is Wipro on the back of another senior exit. So Wipro is down about 1-odd%. Apart from that, names like Sun Pharma, Cipla, so the entire pharmaceutical space not looking that great this morning, just sulking a bit. Then you have, Divi's Labs, Bajaj Auto, Titan. Remember, auto stocks just taking a bit of a breather. It's been a phenomenal run for the auto companies. So you have Bajaj Auto, M&M, that are all just taking a bit of a breather this morning. But what's leading from the front is ONGC, up about 1%. Coal India is doing very well. It's been the strongest stock in the PSU basket this year, 60% higher on Coal India this year. SBI is coming back with a vengeance. Tata Motors, Tech Mahindra, BPCL, Kotak Mahindra Bank, Axis Bank, all of them looking quite good this morning. So the Nifty just about consolidating at the 20,900 mark, but plenty of stocks in the green. You were talking about IRDA, 6% higher on IRDA this morning, so there are plenty of ideas there.
Well, that's right, Sonia. Plenty of stocks actually moving around. GMR Infra, GMR Airports actually, where GQG that bought into that stock. So it had a big run in Friday's trading session. It's higher with 2.5% gains even today. GMR Power and Urban, as we pointed out earlier, well, they were looking at, a probable fundraise. So that's locked in upper circuit, 5% higher. Lloyd's Metals, well, they're talking about expanding capacity, moving towards forward integration. The street likes that. Funding is going to be interesting. For the time being, they're saying it's going to be via internal sources. So that stock as well as higher volumes, though, yet to pick up on that one. 63 Moons, well, that's another stock that's done quite well. That's up closer around 5%, moving from circuit to circuit. So let's see how that one goes. Mascon Dock, they won a big order out there, and the street likes the theme on the whole. That stock as well is up by close to around 4.5%. So plenty of gainers in the broader markets. For the time being, the Nifty is holding with a gain of close to around 10 points. For the broader markets, you have 4 stocks that are advancing, for just 1 stock that's declining.
Okay, well, that's the open as things begin, and it's up. The Nifty is up about 10 points or so. 20,980 is where we start the session this fresh new week. Just a few more names. So Mazgaon Dock is up about 4% or so. That's coming up with decent gains. It's got large volumes in it. IRDA, of course, we just mentioned 6% again. GMR Infra started, I think, about 3% higher. It's 2% up. Friday, of course, GMR saw a big move. By the way, volumes today are humongous. It's coming up as a top volume traded stock across the board in terms of the market. Patel Engineering will come up on your screen. Stocks at about 65. And it's coming up with very strong gains. We got Spencer. Spencer saw a very large move on Friday. I think it was about 6 or 7% higher, another 3%. Saregama is another one we should pull up. MK has initiated coverage on Saregama. Stocks up about 3%, at about 382 now. We got, what else? Anantraj is coming up with 3% again. And, BCL Industries, 4% higher. So here and there, lots of movers. Adani Total is 3% higher. Stocks at about almost 1,200 now. So it's a positive start, and 3:1 in terms of advances to declines is what you've got going at this point in time. Oberoi Realty is starting about 1% lower. There is a Morgan Stanley downgrade on Oberoi Realty. So stocks at about 1430 coming through. Prestige Estates is down about 1%. That note on real estate is interesting from Morgan, and we'll talk more about that later. And I think you've got Suzlon, which starts about 1.25% lower as well. So that's the overall market picture. The big loser, of course, is what's happening with Dr. Reddy's, 6.5% lower at this point, and very large volumes right at the word go.
Even sugar stocks, they're seeing some bit of green. Remember, they've got clonked back last week. Now we'll have to weigh. They're going to be losing out on some ethanol production, but the stocks have already seen a big correction. Though they'll be gaining on the sugar prices as well as the sugar volume. So both of them, we'll have to see how they play out post this big cut that we're seeing in all the stocks. So some green just in the pre-open. So I just wanted to highlight that. And Sonia, what else?
HCL Tech, I was just noticing that HCL Tech has hit a fresh 52-week high today. So it's now up almost 32% for the year. Just pull up HCL Tech. And last week, a couple of days ago actually, Morgan Stanley had a price target of 1,400 on the stock. They said that, if you remember, HCL Tech announced the extension of that partnership with the Nordic-based manufacturing group. And this could be, there's extended scope of services here, more revenue potential. So at a time when Wipro is actually facing a lot of heat because of a lot of exits, right? Senior level exits. At the same time, you have something like an HCL Tech that's hitting new highs. So I guess it's also important in this market to differentiate the men from the boys in that sense, because you can't just buy anything and everything because the market is rallying.
Absolutely, and that's well put. So we got, 20 points now on the Nifty. We're at about 20,993. Ravi Dharamshi is a market master of the day. He's Chief Investment Officer at ValueQuest Investment Advisors. Ravi, good morning. Great to have you with us here on the program. And I think it's a very appropriate time to have you on as well, because you've been a big believer in this energy transition theme, right? New energy, renewables. One of your big ideas has been Praj. We've spoken about this at length in our past interactions. So let me just ask you for your reaction to how you see the change in regulation that we saw for ethanol. No cane juice for ethanol. It's for a limited period, but it's caused a fair bit of anxiety amongst investors, both in sugar stocks and in names like Praj, etc. as well. As a big believer in this theme, what's your take, and what would you do here now?
Good morning, Prashant. Thanks for having me. Without commenting on any particular company, what I would like to say is that this year, of course, a couple of the major sugar-producing states, Maharashtra and Karnataka, have had deficient rainfall. So that is going to lead to a significant reduction in the coverage area for sugar. And that can lead to some sort of a shortage in the future. Hence, government is being proactive by cutting down on the production of ethanol from the molasses route. However, just to point it out, incrementally, all the new capacities that were coming up for ethanol production were already moving towards grain-based production. And in fact, I would say the story going forward is going to be less and less about the first generation ethanol being produced from sugar and molasses, and it is going to be about second generation, where it will be produced from agri residue, forest residue, and those kind of feedstock. So the company in question that you're talking about, or in general the biofuel story of India, is more about multi-feedstock and multi-output. So I don't think this is anything more than a minor blip in the current numbers.
Oh.
No, so nothing changes in that sense, because I mean, the point is you would also have to bet on. There are various ways, right, in which this transition will take place. So in that sense, I mean, again, as you said, don't want to press you on stocks or anything, but you would continue to believe in the names that you own. You would probably add more at lower levels.
So, Prashant, energy transition remains one theme that we very strongly believe in. World has no choice but to move away from fossil fuels, move towards renewables, and move towards circular bioeconomy, essentially using more feedstocks which can be recycled. So I don't think there is a choice as a humanity that we have. But it is various technologies are at various stages in terms of commercialization, in terms of adaptation. So there will be fits and start, no doubt, and there will be times when there might be tightness in the older technologies like fossil fuel as well, which can go into shortage. But it is more likely to be a shorter-term phenomena than anything. over a longer term period, we have no choice but to move towards newer technologies. So in that sense, for example, second generation ethanol is still a technology that is not commercially viable. But at the same time, the motivation remains high. The intent of the governments, the policies, and the money that will flow towards this eventually has to bring the cost down. So we are moving toward in that direction, but it will probably take some time. Sustainable aviation fuel is another technology. For example, even electric vehicle requires a lot of infrastructure build up before the adaptation can start. So I think various technologies are at various stages of adoption.
By the way, the market is picking up now, so don't lose sight of that. The Nifty is now above the 21,000 mark, quite effortlessly actually. It's building onto its gains. The Bank Nifty is the one that's charging ahead, 0.5% higher. So, we had spoken about this last week as to how now the Bank Nifty has to perform for the Nifty to stay well above 21,000, and that's pretty much what's happening. It was a 5.5% rally on the Bank Nifty last week, and now it's piling on some more weight. Ravi, hi, good morning, and thanks for joining in. You think now the time has come for some of these heavyweights, HDFC Bank, Axis Banks of the world, that haven't done anything in 2023? You think the time has come for them to perform, and how are you feeling about this space now?
Morning, Sonia. I think I do tend to agree with your assessment over there that the time has come, and allow me a few minutes to explain why I feel so. Post-COVID, we actually did a great job managing COVID as well as managing the balance sheet. The result of, at that point of time, we were all cribbing that, government is not doing enough to provide fiscal stimulus to help the economy revive. But today we are in a better position because we didn't bloat our balance sheet at that point of time. So our inflation is also in check and our balance sheet is also still not out of shape, which most of the developed world is facing today. So from that point of view, India was already a relative outperformer in the world. But most of this relative outperformance was driven by domestic flows. Now that is going to change going forward. One of the reasons why the foreign flows were kind of not coming to India was kind of uncertainty. We are too close to the central elections for next year, and there was uncertainty regarding whether there will be political continuity and stability or no. Markets, like stability and continuity. So post the assembly elections, it has kind of the probability has moved in favor of continuity and stability, and that is why the markets are actually responding to that. FII positioning overall in the market, in the cash market, is at the lowest level ever. They own only about 16.6% of the Indian equities, which is a decadal low. Positioning on the derivatives market side has also been till very recently on the short side. Last 2 weeks have seen inflows of about $3 billion come in. And I think this is just the beginning of a longer term trend. And whenever FII flows come in, it eventually flows into the large sectors like financials and IT, because that is the space that bore the brunt of the flows going out. Now that is going to be the beneficiary of the flows coming in.
Okay. Now my question was more about specifically for the banks. So, I mean, this banks versus IT argument, right, that we generally have. Do you think banks will now take center stage, at least in the first half of the new calendar year? And if yes, do you stick with the larger banks, the HDFC banks of the world?
So, absolutely right. The larger banks, larger private banks are available at a really, really attractive valuation from a 5-7 year perspective. And this space still remains relatively a high growth area. 18-20% growth for some of the large banks is a very commendable growth over the next 3 to 4 year horizon. And when you look at the financial space globally, you will not find too many financial companies growing at this kind of a rate. So from a relative perspective, maybe there are some smaller banks which can grow faster, and don't rule that out. But this is the best risk reward available in the market, in my opinion, where money is easily going to flow into this sector, and there is going to be an outperformance of the large private banks going forward.
Okay, Ravi, just another theme which has done phenomenally well, which is PSUs, right? And it's been described as the leader of this bull market, and it has been so far, and perhaps many believe it will continue to be. What are your thoughts there, and what are the PSUs, of course, is the common thread across a range of companies in different sectors. But do you believe that? And where do you find the maximum opportunities from here in that space?
See, I am not a believer in that a particular sector should go up because it is owned by government. No, there are certain, even within PSUs, there are different themes. One is, kind of extremely cheap valuation. Second is some improvement of some efficiencies. And third is there are some businesses which are almost monopolistic in nature. So we are more tilted towards businesses which are more monopolistic in nature rather than towards kind of a reversion to mean trade because the valuations were very attractive. Yes, it's a rising cycle and usually all the companies tend to do well in that space. So even a company that does not have any kind of a competitive advantage in a rising scenario will do well. But there will come a time where, as you were mentioning before we started speaking, that there will be separation of men and boys going forward because, the NIM pressure will start showing the I'm talking about the bank specifically, but ability to gather CASA, ability to open up branches, execution, ability to adapt to the new digital age, all that will come into the reckoning going forward. Also, some of the PSU banks are actually levered almost 15, 18x, and it is not a choice for them. Yes, the first QIP for the PSU bank got off to a flying start. They got a lot of demand, but it is more a need, and it is not a luxury. They are raising capital to reduce their leverage. It is not the growth capital that they have. So I am not going to paint every PSU with the same brush that, okay, it's a PSU, this is the market of PSUs, let's buy PSUs. I have to be first excited about the business. Then it doesn't matter to me whether the business is owned by government or is it privately owned.
All right. By the way, just want to mention that the grand old index, the sensex, has hit that 70,000 mark. So big milestones really coming through. We generally look at the Nifty very, we scrutinize the Nifty, but don't forget that the grand old index, the sensex, also hit that milestone of 70,000. Ravi, I know you track the pharma space very closely, so I wanted your thoughts on what's happening with Dr. Reddy's. There is this US FDA, note that has come through, and some of the observations seem like they're severe, according to some analysts. But if someone holds on to Dr. Reddy's for the long term, should they be worried?
So, Sonia, I won't be able to comment on a specific stock, but I can tell you, yes, there are some issues with the FDA compliance, and the FDA tends to constantly keep increasing the bar. So I'm not saying that these are bad companies or there are lapses, of course, but the goalpost has also been constantly moving higher and higher. So won't blame the Indian companies too much, but the main problem over in the pharma space is not that they have US FDA compliance issues, but it is also to do with the fact that the competitive intensity has been tremendous in this space. The buyers have consolidated in US and the sellers are actually fragmented. So the buying power has shifted in favor of the buyers. So the base business that these companies have of the oral solid generics constantly keep deteriorating on an annual basis by anywhere between 8 to 10%. So they need to introduce new products just to stay in the same place. And the problem with the Indian pharma space is that they have not invested enough in innovative R&D to be able to replace that pipeline of drugs with some blockbuster products that can take them through. There are some one-odd complex generics or one-odd inhaler or biogeneric opportunities, but no NCEs or great innovation coming out of India yet. And that has been a bugbear where their dependence on the commodity business still remains very high.
All right, Ravi, it was great talking to you. Always good to learn from you. Thanks a lot for joining in. Have a good week ahead and a great year ahead as well. Happy New Year to you and your team in advance. Thanks for being with us on the channel. Let's move on now. The market is doing not too much, absolutely flat with a bit of a positive bias. But one space has been in focus, which is the commercial vehicle space. Ashok Leyland is the company on our radar. For November, the company saw a 3% year-on-year decline in wholesale sales, while the medium and heavy commercial space declined 10%. To discuss how demand is shaping up here onwards, we have Shenu Agarwal, the Managing Director and Chief Executive Officer at Ashok Leyland, joining us now. Mr. Agarwal, good morning and thanks a lot for joining in. November saw a year-on-year decline in commercial vehicle volumes, not just for Leyland, but for peers as well. I want to understand, was there any kind of one-off impact in November, or do you expect to see this decline continue in the months to come? What are the demand trends looking like now?
No, we think we are very, very optimistic about the industry. I think November was just a blip, one-off blip. in the market. I think just a combination of a few factors. I think elections was one where in the states which were undergoing elections, we saw a slight dip in the retail demand. I think it is temporary and it will come back. I think there was some corrections in the retail, in the inventory as well. Yeah, but all these are temporary. December already, we are like already into December and it is looking very, very good. Also, Q4, we are very optimistic about the demand overall.
Can you give us some numbers? When you say you're very optimistic about the demand, what kind of growth do you see for the industry by the end of FY24? And what is the reasonable assumption for FY25, both for the industry as well as for Ashok Leyland?
See, for FY25, it will be too early. I think give us a couple of more months and we'll get back to you on FY25. But for FY24, the current year, when the year started, we said MHCV industry might grow by about 8 to 9%. We are still sticking to that forecast for the year. So far, industry has actually done better than that forecast. But I think overall industry should be about 8 to 9% range in terms of growth over last year for FY24. As far as LCV industry is concerned, we had said in the beginning of the year that it might grow by 4 to 5%, which has not happened so far. But still, we are very hopeful that even LCV industry might come back in the balance 4 months, and we will see a positive growth in LCV side as well.
All right. Hi, good morning, Mr. Agarwal, and thanks so much for joining in. Well, we have Tata Motors over the weekend. They have said they're going to be taking a price increase. Do you have similar plans as well? Are you looking to push through a price increase? Point number one. And point number two, from August onwards, the discounting seems to have gone up. What is the current situation?
Okay, on the price increase, yes, we have heard that Tata has announced a 3% hike for commercial vehicles pricing from 1st of January. We have not decided on the price increase as yet. But yeah, the fact remains that, over the last couple of years, the amount of input cost that has increased, we have not been able to pass it on to the market completely. So there is a need for a price hike. As soon as we take a decision, we will also announce that. As far as the discounting is concerned, I don't think there has been a major shift in discounting in August or after August. I think the discounting levels are quite consistent with what we have seen in the past in the industry. So we are quite hopeful. Actually, what we are actually focusing on is getting more and more pricing power through better products. There's a lot of focus that we are putting on product segments, especially where we are not very, very strong. Yeah, okay. So that is actually helping us quite a lot.
Got it. So you've cleared the air on that front. The other big headline today is about the mandatory cabin AC from October 2025. I want to understand from you, how much can the cost increase go up by on this? And for the industry on the whole, what is the penetration as of now?
See, the cost increase won't be that high. I think it would be still within the range of 1 to 1.5%, right? So industry is actually welcoming this step because it will really help in terms of efficiency and productivity of the vehicles that we have on the road or will be there in the future. So I think it is a welcome step. So yeah, the date is first of October 2025, which is quite far away. But yes, we shall be ready with these new regulations.
What is the penetration as of now for the industry, for your company?
Penetration right now is very, very small. I think it is like less than 10%. Yeah, so with this mandate coming in, I think the penetration would really jump from that time onwards.
Mr. Agarwal, between LCVs and medium and heavy commercial vehicles, what is the volume split for you? I mean, on an average, if you can tell us, because on LCVs, I think most are projecting a small degrowth. Although last 4 months, as you said, maybe things will pick up. And is there going to be any change in strategy? And what are some of the drivers that you see for both markets as we head into FY25?
Yeah, so on the LCV side, see, in the long term, we are very, very bullish about the LCV market. Whatever is happening in the country in terms of infrastructure improvement, in terms of consumption patterns, etc., those are very good signs for LCV market. LCV is kind of a last mile delivery vehicle. Yeah, and therefore that market, as you can understand, will grow leaps and bounds into the future. So although there is a small kind of aberration this year that LCV market is not growing so far, while we are still hoping that it will show some positive momentum going forward in the balance 4 months. But it is possible that LCV market may end up at the same level as last year. But I think strategically it does not deviate us from focusing on LCV, because as I said, in the long term, LCV is a big play for us. We still have only 20% market share. We operate in a particular segment in LCV. So for us, it is both about expanding our product range as well as gunning for more market share in the LCV.
And how does your own volume split, sir, between light commercial vehicles and M&HCV?
So volume split, it's not right to compare the volumes, but because the average price or the average realization of a LCV would be like less than half of MHCV. But still, the volume split would be roughly, let us say, 70-30, 70 for MHCV.
Okay, since 70% of your business is for MHCVs, let's talk about that business a little more. You were talking about an 8 to 9% overall growth for the industry. What would the MHCV growth be for the industry? What would it be for your own business by the end of FY24? And when do you think you'll get to that targeted market share of 35% that you had guided for earlier?
Like I said, for the current year, we are expecting MHCV market to grow somewhere in 8 to 9% range. Of course, Ashok Leyland wants to do better than the industry, as we have been doing so far. We are at roughly 30% market share right now. We are improving on it as we go along. 35% is our medium-term target, which we want to achieve in the next 2 to 3 years.
Okay, so 35% market share is what you'll achieve in the MHCV space in the next 2 to 3 years. Got it. In terms of margins, I wanted to understand, because, you had given a target of double-digit EBITDA margins in the near term and mid-teens in the medium term. Now, you've already hit 11.2% margins as of the last quarter. By when do you think you'll be able to reach that mid-teens margin level? Do you think you can achieve it by the end of FY24, maybe early FY25 itself?
No, that will take a little bit longer. That mid-teen target, we had said that again, that would be about 3 to 4 years later. But this year, we are very happy with the performance of our margins. We thought that we will end the year at double digit, but we were very fortunate to have double digit EBITDA margins in the first quarter itself. Like you said, last quarter, we were at 11.2. Of course, the mantra for Ashok Leyland is profitable growth. So we are very finely balancing our market share and profitability aspirations.
Okay, all right. Mr. Agarwal, what about defense? In the first half of the year, I think revenues were around 300 crores, if I'm not mistaken. And for the year, I think you were guiding for 800 to around 1,000 crores. Is that on?
Yeah, that is very much on. In fact, we already have very substantial amount of orders. We also have a very strong order pipeline actually for FY25. So defense business is doing very, very well, and I think it will continue to do so at least for the next 2 to 3 years.
So 1,000 crores is on the cards for this year?
Yeah, I said 800 to 1,000 crores. So we are pushing it to be 1,000, but definitely we'll achieve 800.
What about on EV? You all had plans. I think the capital outlay that we're looking at was around 1,000 crores. You could tell us what is the updated number out there on the EV part of the business, and how do you fund it? Will you look to dilute some stake? What is the funding plan basically?
No. There is no funding plan as such for Ashok Leyland. Ashok Leyland cash position, debt position is very good actually right now. Our debt equity is roughly at about 0.1 to 0.2. Yeah, so there is enough ability to raise capital. Now, for FY24, our Capex would be somewhere around, let us say, 500 to 750 crore range. And this includes all the investments that we are doing on EV and other alternative fuels. Now, as far as electric buses and electric light commercial vehicles are concerned, you know that we have a subsidiary company called Switch, in which all the activities related to those two product segments are happening. And that company is being funded by Ashok Leyland itself right now.
Okay. On this topic of EVs, right, there is a news report suggesting that the US is going to back a bid by the government to introduce 50,000 EVs on its roads by 2027. There's a joint $400 million funding that the US and India are looking at together. Can you give us the latest on that, whatever you know, and how will Ashok Leyland be able to contribute to that?
Yeah, see, as far as, I know this is something of sort of a fund that US and India are creating to provide a payment security mechanism for all the GCC contracts that government wants to push to bring adoption of electric buses into public transports. So I think industry has been asking for this for a very long time, and now it seems to be happening. So we are yet to get more details. But I think this is a great step in the direction of adoption of electric buses in public transport. Government has this mission of putting 50,000 buses on the roads for public transport. And I think something like this would immensely help it.
Okay. Mr. Agarwal, thank you very much for joining us. It's a pleasure having you with us here on CNBC TV18. And thanks indeed for taking out the time and coming on. Well, we'll get a quick look at the market. 10 points higher is what we have, 20,980. We take a quick commercial break here, and we'll come back with more on the other side. Stay with us.
CNBC TV18, embarking on a quarter century of excellence. CNBC TV18, embarking on a quarter century of excellence.
Welcome back. Well, as we bid goodbye to 2023 in a few days from now, it's time for our special offering. The big winners of 2023 will be focusing on stocks which have really shown a very stellar show in this year. Today, we're focusing on Birla Corp. The stock is up more than 40% in 2023. Mr. Sandeep Ghosh, the Managing Director as well as the Chief Executive Officer, joins us on the show. Hi, good morning, Sandeep. Thanks so much for joining in. And congratulations, your shareholders are very, very happy. At the start of this year, you had valuation comfort. Now, that seems to have trimmed down a little bit because now the stock trades at more than $90 per ton on an EV per ton basis. So the outlook is going to be important. Tell us a couple of numbers. One is on the volume parameter. You all were guiding for around a 15% growth in terms of volumes for the year. Do you maintain that? And also for the year, the EBITDA per ton, you all were talking about 850 rupees per ton. That would mean the second half of the year has to be far better. Do you stick to both these two numbers?
Volume we definitely stick to. I don't see any reason for volume being, under pressure or threat, because our volumes are based on, both the market projection as well as our own internal, some of the capacity additions which had come up and the scaling up which is happening especially in our down south in the Mukutban plant in the central Vidarbha region. Well, that's so I think volume we are very comfortable. EBITDA we indicated about 850, closer to 850, and we have so far the assumptions on which it was based, we don't have any reasons to revise it. We'll take a closer look towards the end of the year, but so far I think all the indications, both for us and the industry, I think are moving in the right direction. Everybody, I think, has based things on a fairly conservative plane this year, especially on the prices front. And so there, I think that's why we are sticking to our projections, because we don't see a major disruption in the market.
Okay, the reason I ask you is because second half of the year, you'll have to do nearly 1,000 rupees per ton to get that average to around 850 rupees. For the time being, you're appearing fairly confident. I wanted to ask you about, since you have your core focus would be on states like MP as well as UP, and MP went for an election. So was there any slowdown in terms of demand? Did you experience that? And also since, I've been tracking the cement space for a while, Central India is getting very, very competitive. Do you believe so as well?
See, yeah, it is getting competitive. There is a pressure on capacity utilization of most players, but there, I think we are reasonably more comfortably placed, without getting complacent about it, is because our factories have been running in Central India at 95% plus capacity utilization. And we are therefore not really in a volume game. We are focused, in our chosen segment and the geography where we expect to retain our market share, both in value terms as well as in volume terms. Why I say value terms is, we are a very uniquely placed company where we have got almost 50% of our volume coming from the premium end, another 50% coming from the value end, which is very distinct from other cement makers who are present by and large either only on the premium end or on the value end. So they face the competition in each segment, in isolation. Whereas we are able to straddle between the two segments, and with a relatively, robust but smaller market share, we are about 20% in our core markets in those areas. And with a strong brand equity, plus I would say very strong go-to-market assets in terms of sales and distribution, in terms of our people, logistics capabilities. So that's where we expect to hold on to our own.
So, Mr. Ghosh, you said volume guidance 15% for FY24. Can you also help us with some numbers on the EBITDA front? Earlier, you had guided for an EBITDA per ton of 850 rupees. So, do you think you can maintain that for a full year of FY24? Or given the kind of pressure, perhaps there could be some dip there as well. And if you can give us an early indication of what FY25 could look like in terms of an EBITDA per ton?
I wouldn't go into FY25 just now. FY24, I just mentioned to your on the show earlier that we are staying by our indication of closer to 850. We don't have reasons to change it just now because there are certain upsides and tailwinds which we have assumed in and which so far seem to be on track.
Can you also give us some indication of what debt would look like? There is 1,000 crore capex that you have in this year. So the concern is that the debt may not come down. What is the expectation of net debt by the end of... Yeah, go ahead.
We're not expecting debt figures to change just now. That's why we are not going in for any major capex expansion. Our current, priorities is scaling up to Mukutban, which is our new facility, which was earlier delayed due to COVID and various other factors. It's ramping up. But right now, we are tracking very much as per our expectation and what we have projected. We are very happy with the scale up which is happening there. So by the end of the year, that will put us on a firm footing. Meanwhile, we'll obviously not compromise on our sustenance capex. And then going forward next year, we've already announced our first new grinding unit in UP. We'll go for that.
Okay, all right. But debt will not come down from these levels?
At this moment, we are not looking at debt coming down significantly.
Got it. Final question then. What about inorganic growth? At Kesharam Industries that went into the Ultratech fold, did you all have a look at that asset? And I can see a smile on your face. So I want to know your plans in inorganic growth. You're already at around 20 million tons. As you said, you'll have laid out a couple of grinding units as well as some clinker. Where do you see you headed to? And also, if you have to go for inorganic growth, what is the ticket size you look at?
We are not looking specifically at inorganic growth. We have been very, very, I think, transparent in our, statement of our intent. Our objective is to get from 20 million ton to 25 million ton in 26, 27. And at the moment, we see that happening primarily from organic growth. And that path has been laid out. We are going to, our next big ticket expenditure would be line 2 in Maihar, which is the Reliance unit which we had acquired. It is all laid out for the second line expansion, and that's what we are going to do, almost equal size. Prior to that, we will put some grinding facilities in place, and the first step towards that is UP, which we just mentioned. So at the moment, we are not, unless something comes very attractive, we are not looking at anything inorganic aggressively.
Okay, all right. We'll leave it there, sir. Thank you very much for joining us, and it's a pleasure getting those details from you, for our viewers. Thank you very much indeed. Well, let's talk about the next story, and this is a big one. The Ministry of Commerce and Industry has amended the Special Economic Zone regulations. Industry experts expect the new regulations to allow SEZ areas to be leased faster in the future, helping occupancy levels. To discuss what do these new SEZ amendments mean for the industry and what's the outlook basically from here out for the companies involved, we have Aravind Maya, Chief Executive Officer at Embassy REIT, and Ram Chandani, Managing Director, Advisory and Transaction Services India at CBRE. Gentlemen, great to have both of you here. Appreciate your time. Prashant this side. Arvind, if I can start by asking you, what will this mean for your business? I mean, what is the vacancy, in the SEZ portfolio that you operate, and do you see an improvement in occupancies because of this notification?
Yeah, sure. Thanks. Good morning, Prashant. Thanks for having me on the show. Big picture, I think very positive for the sector. High-level numbers taken by IPCs. There's about 300 million square feet of SEZ space, of which around 20% is vacant as of today. The numbers growing. So what that means is this entire space becomes marketable as of now. So from a commercial real estate, anyway, we are already seeing growth in the form of global captives taking a lot of space. With this SEZ regulations out of the window, I think we'll have a twin growth engines to take our occupancy up to higher numbers.
Arvind, this 20% number, has it been increasing over the years? Has it been coming off? I mean, what has been the trend, and what will this do? I mean, how much will this go down by vacancy? Yeah.
Sure. I think to give you a sense, I'll take our REIT as an example. In the past, we used to have close to 50% of the new lease up from in the form of SEZ space. That's now dropped to around 15 to 20%, right? That's caused, as and when leases are coming up for renewal, people want more non-SEZ space. We can speak about it in some time as to the reasons as to why that's happening. But the space is going on increasing. It's moved up from, say, 10% to 20%, expected to go up further. But with this new regulations, effectively, we can market this space as a non-SEZ, subject to we demarcating it as NPA. So this should be able to kind of stem the increase in non-SEZ spaces.
Okay.
Or rather, SEZ spaces.
Sure. Ram Chandani is also with us of CBRE. Ram, your thoughts on these amendments that have come through? What kind of boost would this give to demand for commercial real estate?
I think stemming back, thanks for having me over. Stemming back from what Arvind mentioned with the 20% vacancy, that's approximately 38.5 million square feet of vacant space across the country, across the 7 major markets. I think the big opportunity is that occupiers who were not following the SEZ regime from the 2020 sunset clause, I think this gives occupiers an opportunity to go ahead and look at that space and co-locate their SEZ operations alongside their non-SEZ operations. That's one big plus. The second part is that with the growth of the office market again in India post the 2 odd years of COVID, we've seen absorption levels last year hit the 55 million square feet. This year again, we expect the year to close at 55 million square feet plus. I think the opportunity is that this is all quality commercial grade office, right? It's grade A office. I think this gives the opportunity for occupiers to consider these who are not working under the SEZ regime. And this is great quality space that's been lying vacant. Obviously, it makes life easier for them who don't fall in that regulatory environment of following an SEZ unit for their growth. And this will boost the overall leasing levels, because in some of the key micro markets in India, there's a lack of quality of grade A supply. I think this will help occupiers to consider that space.
Got it. Thanks for that. Arvind, just to come back, so you said those reasons why newer people who've been coming in have been not coming into SEZ. Briefly, if you can lay them out. And second, with this change, how fast will the pickup be? Or will it take a lot of time to find new tenants, etc.? Go on.
I think in terms of what's happened is, historically, it was largely growth from tech occupiers taking up space in SEZ. 2020, sunset came into picture. Post that, of course, there's been the interest rate hike, and then IT industry slowdown. So IT as a sector has not been taking a lot of space. Rather, they've been giving up space as a part of their portfolio rationalization. All the new space take-up are from global captives, and they don't want a SEZ space because, one, they don't have any direct tax benefit, and two, more importantly, they don't want to be in the physical constraints of a SEZ where there are a lot of regulations, because of which the new age occupiers prefer a non-SEZ space. That's the reason why the demand for SEZ space reduced over a period of time. So that's the answer to your first question. And in terms of timeline, I think we need to wait a bit, because while the regulations have come out, and they've said that it requires a board of approvals, that's a BOA of SEZ, to sign off on this demarcation. What's the real SOP for it? I think we are waiting for that from government. We as an industry have represented for a single window clearance so that it becomes a much smoother and faster process. So we have to give it some time for the SOP to be in place.
Got it. Ram, I wanted your thoughts on the overall commercial real estate space and the kind of realizations, right? Because if you look at residential property prices, they've risen about 20-25% across cities. But commercial or office rentals are largely flat if you map it over a 6 to 12-month period. Why do you think that is? And what's your own view on how things may shape up in terms of office rentals?
One of the major reasons why our office rentals have remained fairly flattish is it's a supply-demand story, right? Obviously, with 2 years of COVID, where the absorption levels were much lower. Last year was a good comeback year. This year, as a follow-through in 23, has been a great year in terms of expansion, not just from the banking financial services sector. We've seen engineering, manufacturing sector, their GCCs expand here. The healthcare sector has dramatically seen growth. I think overall, for India being a large offshoring innovation hub for a lot of occupiers, I think the talent base over here is the biggest attractor for us in India. And that's really driving the growth for us in India. And if you look at the rental numbers, we've seen quality parks and micro locations that have accessibility to infrastructure, social infrastructure, amenities, etc., are the ones that are attracting the occupiers. If you create that energy in your park environments, in your business park environments, you have proximity to public transport. I think those are the parks that will see the growth. And that's what we're seeing across India. Whether you look at NCR, whether you look at markets like Bangalore, Chennai, Hyderabad, Mumbai, Pune, all these key markets have seen growth.
Yeah.
And this will continue to grow. I think amenitization of space is important. And just the employee experience that you create in these environments will be the biggest attractor for attracting tenants in these parks.
Arvind, same question to you in terms of sort of rentals and pricing. What's the expectation? What should we expect as we head into 24? One. Second, what is the SEZ sort of, what is the SEZ share as a part of your total office portfolio? That is second. And what kind of impact do you see to your earnings going forward as this sort of starts to become clearer and you're able to, give this space out in SEZs to newer tenants?
Sure. I think in terms of pricing, we've already seen the price go up over the last 12 months in the key cities like Bangalore, Hyderabad, Chennai. That's largely, as I said, because of increasing space take up by global capitals who want the best of amenities, which is what we offer, and they're not really very price conscious. They need the best of space. I believe with this, the demand for non-SEZ also going up, rather the SEZ converted to non-SEZ going up, we believe that the price should go up even further in the coming years. Just in terms of our portfolio, we have close to around 55% of our portfolio in the form of SEZ. And over a period of time, we see a lot more of these spaces getting converted to non-SEZ as the old occupiers give up space. What it means in terms of our earnings, I think we did clearly mention as a part of last quarter earnings that we believe the occupancy has bottomed out now. We were around 83% last quarter. Pre-COVID, we were close to 95%. This kind of gives a clear path for us to move the occupancy from 83 to 95, which logically should take the earnings up and the distributions up in the coming years. Would refrain from giving any specific guidance on the numbers, but clear growth path available for us in the next few years.
All right, we'll leave it at that. Thanks a lot for joining in. Appreciate your thoughts. Well, let's get back to the market now, which is looking pretty fine. So 21,000 is holding quite firm. Mitesh Thakkar is with us. Mitesh, do you think we can build on to these gains for the rest of the day? And what are the stocks that you're looking at?
So, good morning again. I think, the trend remains on the upside. So I think there's a good chance that next few days will be positively biased and intra dips will be bought in. So maintain a positive stance. On the stock side, I have a buy on Kotak Bank. A disclaimer that we have recommended this to our clients, so there's vested interest, but buy with the stop at 1840. Look for targets of 1895. And the other one which I like is PVR. I think PVR is also giving a good price and volume breakout today. So buy here with a stop at 1765 for targets of 1820.
All right, let's slip into a quick break on that note. On the other side of the break, we'll talk about the commodity space. Manisha Gupta will join in. Do stay tuned in.
CNBC-TV18, embarking on a quarter century of excellence. CNBC-TV18, embarking on a quarter century of excellence.
All right, we have a focus on the commodity markets now. Manisha Gupta is joining in to tell us what she's looking at. Manisha, good morning.
Morning, Sonia. Thank you for that. I want to talk about gold because we've seen the prices very, very volatile. We saw an all-time highs and a very big correction from there. You know, the all-time high that we've seen in this year has been 2,150, and we're just about holding around that $2,000 per barrel mark, per ounce mark, I beg your pardon. So $150 of a decline is what we've seen. But more importantly, what I'm focusing on is the sovereign gold bonds. The markets were hoping that they would be launched around Dhanteras or Diwali, but all of that just passed away. And now we have seen two tranches being launched right now. One is in December between 18th to 22nd, and the second is in February that comes in on between 12th to 16th in 2024. Up until now, we have 67 tranches, including all of this being launched into the markets there. And the first tranche, remember, was launched in 2015. We did see that being launched at around 2,400 rupees per 10 grams per gram of a mark, and that redemption has happened in case of 6,000 rupees on the higher side. So a big 128% of gain coming in from that one. More importantly, total holding until now has been at 118 tons, and this is after the redemption of 2 tons that we've seen of the 2015 tranche as of now. I mean, this is one instrument within gold that has garnered a lot of interest and excitement, and we have seen record buying happen within the calendar year of 2023 as well. I just quickly want to take you through some benefits here, because this is something that the government is pushing quite strongly. So when you buy a sovereign gold bond, it's 24 carats. That is, it's 99.9% purity of gold that you see. The maximum subscription that you can take is of 4 kgs within a fiscal year, whether you are an individual or an HUF. If you are an institute, then you can buy until 20 kgs in a financial year there. 2.5% per annum is something that the markets clearly are rejoicing about, because even as gold prices have gained so much, 2.5% of an interest is what you gain every year there. Also, when you look at sovereign gold bonds, they are eligible to be put into a demat form. It also, you get a certification of holding when you buy into SGBs. The other important thing is when you're buying it online, you get a discount of 50 rupees per gram there. And most importantly, there is interest on SGBs taxable, but the capital tax gain is something that this is exempted from. The markets also do see that this can be used as a collateral for loan as well. And that is the reason that you have seen huge holdings into this one, 118 tons at this point in time.
Manisha, thanks a lot for that. Well, I just want to leave you with one chart, the chart of IRDA. Now, we've been talking about how the entire renewable energy space is doing exceptionally well. IRDA is now up 15%. This is on the back of a huge rally that the stock has seen post-listing. So the stock of IRDA should come up for you. There you have it, 15% rally there, a big run in that entire space. Let's slip into a quick break. On the other side, our special segment, it's the economy. Lata will get chatting with Digant Haria of Green Edge Wealth Services and Karthik Srinivasan of ICRA to put focus on the NBFCs and the PSU banks along with the fintech lenders. Stay tuned.
CNBC-TV18, embarking on a quarter century of excellence.
Co-powered by